Cava is moving lower here at the moment, though off the lows, down about 5% after reporting fourth quarter results. It's been a rocky start to the year for that stock, tumbling around 25% in the last week heading into earnings, as some analysts say it could be overvalued after a big run in 2024. Let's bring in Wedbush Managing Director Nick Setyan. He has a buy rating on the stock with a $150 price target. Nick, anything you've seen in this report so far? I mean, 150 is about the highs of where it's traded, I think, back in early December. Anything that gives you pause on your thesis, or is this just people digesting realities around the valuation?
Yeah, I was actually fearing an even more conservative guidance out of them. I mean, they're, customarily very conservative, one of the most conservative management teams within restaurants in terms of guidance. So, the market's looking at everything as cup half full, but I actually think this guidance is a little bit better than feared, and it sets up for potential beats as the year progresses. So we'll see what they say about the quarter-to-date trends. Some of the sort of company-specific catalysts around May innovation as the year progresses, loyalty, throughput, et cetera. But at the end of the day, with 2.5% pricing or so in 2025, they're still going to be, one of maybe, five at most names that's going to put up positive transaction growth in 2025.
Something that caught my eye in the earnings release was them talking about rolling out a new labor model that delivers a better operator and guest experience. What can you tell me about that? What questions might you have about that, and how it's going to affect the profitability and efficiency of the restaurants?
Yeah, it sounds like it's some kind of a labor scheduling tool, which a lot of restaurants are implementing a lot of technology, both back house and guest facing. So it sounds like once it gets rolled out, it has a potential to help on labor expense and drive some labor leverage, hopefully.
We were talking earlier in the show about some macro numbers showing some shaken consumer confidence. Is Cava immune from that because it's growing so quickly and because it's not trying to be super budget conscious? It's, fast, I don't know if you call it fast casual anymore. It's supposed to be quality food, et cetera. People have shown a willingness to pay for that in the demographic. Or eventually, does the macro start to hit them?
Like on the margin, the weakness has been centered mostly around the lower income consumer. No one's immune. They do have a lower percentage of customers as sort of the lowest income consumer, given their average check and the fast casual positioning. But at the end of the day, on the margin, they're still going to see some of the impact if that customer, goes away. But again, I mean, that's where the quarter-to-date commentary will come into play. It's been a weak January and even weaker February across restaurants. I think we're all trying to pinpoint exactly, what part of it is weather, you got holiday shifts, et cetera, and what part of it really is potentially another step down in that customer, or has that, band even extended to beyond sort of the lowest income customer. So those are all things that I think we're all looking forward to around the quarterly commentary when, the earnings call starts.